Well, look at that. Whoops. Spire did an oopsie. Okay, that call I wrote previously, I guess it doesn't look as stupid anymore. Trimming my okay. At least I sold some at 1288. So everyone's freaking out. Yeah, there might be a possible. Is this on? There might be a possible recession, right? Whatever. After Jerome Powell talking about rate cuts. I talked about this earlier, right? Anytime there's 100% certainty in anything, just be careful. So this video, I kind of wanted to talk about kind of an overreaction in some of the stocks that I'm holding, and more specifically, I wanted to talk about Sofi Technologies and Spire Global, which are both, those two together are the biggest positions. I think that's more than 50% of my portfolio. Whoops. Talk about diversification. Nope, that's not me. So first thing, Spire Global. Or let's just look at the Qs first, right? Let's look at the Qs. So over here, I bought a put, a 0 DTE put, thinking it would fall and reclaim, and basically fill this gap. And I was one day early. So good job, Jason. So I lost like $80, whatever. But so honestly, like, people are like freaking out. Oh no, it's the end of the world. The Q is collapsing. We just refilled this weird gap that happened out of nowhere. Like, honestly, what was this gap? What even caused this gap? Like, what caused this gap? Or what caused the Qs to just jump up so much? Microsoft's mediocre earnings? Think about it. Hello? Like this gap was not supposed to be there to begin with. I don't even know what this gap was there for. In anticipation of Powell talking? Is that what it was? This is just BS. Like, I feel like that was kind of obvious. Like, that would happen. I thought it was going to happen the day before. And then I didn't buy puts today, or else I would have been up 20x. My life. Anyways, so just reiterating, I honestly think that, like, this, like, everyone, like, freaking out, like, oh, this is the end of the world. We're going into a bear market. Recession's coming. I don't think so. Like, look, like, legit, it's just refilling this weird gap that occurred out of nowhere. That's all it is. In fact, I might buy puts into the day, or into the close. I might buy calls into the close. Anyways, let's talk about, so I wanted to talk about Sofi Technologies. Let's talk about Sofi first, right? Because a lot of people seem to like Sofi. So even, let's assume there is a recession coming, right? I believe that aside from interest rates going down, even including the scenario where interest rates do go down slowly, I actually think that a recession might actually be, like, knock on wood, it doesn't happen, but it might be, it sounds bad, but it might be the best possible scenario for Sofi to grow. Like, it would be the best time for anyone that wants Sofi stock to accumulate. Oh, I should really start buying before that goes any higher. Whatever, I'll write this video, it doesn't matter. I'll make this video. Anyways, like, think about it, right? Let's look at, so I have these two things up, right? Let's look at JP Morgan, right? JP Morgan ups its provision for credit losses. Right over here, right? Increase their provision by some, like, 100 million, right? We'll say that's 105 million, 150 million, right? Let's look at Bank of America. Increases its provisions by 400 million. What does that mean? What does it mean to increase your provision for credit losses? That basically means that the banks and the risk officers, or like people that are managing the risk of banks, they think that there's a higher probability that people are going to default on loans, default on credit cards, default on like X, Y, and Z, right? So they need to set aside more money in case that happens. And that basically means that they realize they did an oopsie, and they lent to people on bad credit. They lend to people that have like a lower probability of paying back, right? So these people have to set aside money, like these banks have to set aside money in order to account for that. That's what increasing your provision for credit losses means. Now let's look at Sofi Technologies' latest quarter. I remember him talking about 8%, was it? 8%. Was it here? Okay. they talked about how in March, is it March? March. Delinquent loans peaked in March, which means that we're on the opposite side of this peak, right? We're not like basically we're getting more safe, right? Or SoFi is becoming more of a safe, like more safe than it was in March. We're on the opposite side of the peak, right? So in fact, our loans are becoming more and more safe, right? Unlike this side where they're actively increasing their provision for credit losses because their loans, they realize, are becoming shady, becoming shaky, right? Again, we're on the opposite side of, I mean, if this is, I guess, if you believe what management is saying, we're becoming, like, their loans are becoming more safe, right? Like, and I'm sure that most other banks, right, that don't have this high requirement for, like, for credit score and all those things, right, they're also going to be increasing their provisions for credit losses, being more risk adverse, right? Whereas SoFi actually can afford to be more risk on. Is it risk averse? Well, yeah, I think so. Risk on, right? I think he talks about, what was it, 11%? What did they talk about? 11%? Right here. For life of loan losses on the entire cohort of loans to reach 8%, which is what they kind of expected, right? They're currently only at 3% net cumulative losses. For life of loan to reach 8%, unpaid principal would have to have a charge-off rate of 11%. Basically, 1 in 10 people would have to not pay. Basically, like, they're saying, like, this is higher than most, like, I think all of their other stuff, right? All of their other, like, this rate of loss is higher than, like, most of their past, if not all of their past. I'm too lazy to check right now, but that's a really high loss. Like, that's a really, like, big margin of safety, right? Unlike you see Bank of America, which is too big to fail. Unlike you see JP Morgan, too big to fail, right? Even they are struggling. Even they are worried about failing. That's why they're increasing their provision for credit losses, right? SoFi, on the other hand, is like, whatever, man. I can afford to gamble some more, right? That's what SoFi is saying, because they built their bed, or they made their bed, right? And now they get to sleep in it, right? They've accounted for the safety risk, right, in the past, and now they have this margin of safety that basically other banks don't have. If we do enter a recession, I believe that SoFi will be one of those banks that will just be there to gobble up any of the banks and any of the customers of those banks that fail. They'll be there, right? That's my belief. I think that SoFi is, like, in the case of a recession, which, again, knock on wood, that doesn't happen, but in the case of a recession, I believe that SoFi would shine even more, right? Because they basically have all this money, right? They don't have as much of a risk as all these other banks have, right? Because they're lending their money to people that are credit worthy, right? They're lending their money to people that are not shady, right? So that's why I believe that, like the current drop on SoFi is almost ridiculous, right? What is it, like 712 right now? Like it's trading with, it's obviously just trading with the Russell, right? This is what I believe. It's just trading with the IWN. Damn it. IWM. It's just trading with this. That's all it's doing, right? Yes, you do have the small caps that are going to be super, like, scared in the case of a recession, right? Because they're not profitable yet, or like they're in pure growth phase, and like they didn't account for a recession, right? But like, if you single out the stocks that are strong, that have strong fundamentals, a strong balance sheet, it's at 708 right now. Like, that's a screaming buy, in my opinion. This is crazy. Hey, look, support line. Let's see if it holds. Anyways, but like just read their balance, read their ER, read their earnings. There's no reason, like, in the case of a recession, SoFi would be, like, if you compare it to all the other banks, SoFi would be definitely one to win, right? Because they basically, they planned for this, right? They planned accordingly, and they stayed safe, right? Even in their earnings, I think Noto says something about, like, their competitors' credit card. let's say credit card. He talks about how I think it's in the questionnaire or something like that, but he basically talks about how like they're going slowly. Oh, right here. It's right here. They're right here, right here. But in credit card today, we're going to continue to move relatively slowly and not step on the gas too hard, because this is the business where you can lose a lot of money and you can lose it every day, right? He's basically calling out Robin Hood, but he's basically calling out companies that are like being way too risk. Okay, what's risk adverse means? Basically, the companies that are being too risky, right, and just giving their credit cards to anyone willy nilly, right, just because you're paying $5 $60 annual fee, right? He's basically calling them out. Okay, we're trying to stay safe in case crap hits the fan, right? And if people are projecting a recession, SoFi is definitely the place I would store my money, in my opinion, right? Like definitely not financial advice, but like you want to look for a safe bank, someone that's executing, like a company that's executing, growing, and staying safe all in one. That's, in my opinion, that's SoFi, right? So that's enough about SoFi. Everyone's a bull on SoFi, right? There's enough content on SoFi. Let's talk about Spire Global. Spire Global, right? The company that I'm super bullish on, right? Ooh, what the heck happened? It fell to 1244. Listen, in the case of a recession, first of all, they're projecting free cash flow by this summer, right? They just got a bunch of funding from the EU or from the UK, one of those. I think it's from the UK. They just got a bunch of funding from the UK. They have like contracts from like countries, from big companies, right? And let me tell you this. If Spire Global, if their customer base was you and me, right? If it was just like anyone, right? It doesn't matter what my credit score is, right? If their customer base is just like everyday consumers, yeah, I'd be kind of worried. But who's their customer base, right? I said this in a previous video. Spire Global is more or less, in my opinion, right? I believe. Sorry, it's really loud. But as I said in previous videos, I think that Spire Global is more or less recession-proof, right? As long as they get their debt checked, as long as they get their balance sheet checked, right, with their free cash flow, with just getting more and more contracts signed, who is their main customer base, right? It's countries. It's big companies that need their data, right? Like this drop, I'm super glad because I sold some shares at 1288 because of I wrote a covered call and then it jumped to like 15 way back here. How did I know it's gonna jump like $4? Anyways, so I'm like, hey, I did something well, right? But like, think about who their customer base is, right? Like countries aren't like, they're not gonna stop paying their bills because of a recession. Like big companies that need their data, that's using Spire Global's data, they're not gonna stop paying their bills because of some recession, right? Like I think that they're more or less recession proof, right? Again, the people that are hiring them to manage their satellites, right? These people aren't people that would like these cohorts, this group of like customers aren't the group of customers that are like counting pennies to go buy McDonald's or something like that, right? Like they have money, so I think that Spire Global is because their customers are more or less recession proof. Spire Global is recession proof. That's my opinion, right? Also, in addition, if you looked at Google's earnings, right? If you looked at why it dropped, they said that it's because their AI isn't working, right? People say there's a term called race to the bottom, right? Which is basically you just keep going to the bottom, like there's no bottom in sight. Like basically you just becomes a price war at some point. But in brokering data, that's a race to the top for specifically AI companies, right? You like the AI companies that need to train their AI. Think about it. They want their AI to be stronger, faster, more up to date than all their competitors, right? Like, so they'll want as much high quality data as they can possibly get. Spire Global is sitting on that high quality data that has to be refreshed every month, every week, even every day, right? Even every hour, right? You're looking at migration patterns, you're looking at weather patterns, you're looking at like I don't know, like radio, like I don't know, there's a bunch of stuff, right? You look like, especially war, right? Look at what's happening with Iraq, or is it Iran? I think it's Iran. Look at what's happening in the Middle East, right? Like, people are scared, right? People need like to up their security, and people need to up their like everything in order to like stay competitive or to stay like safe. And Spire Global is sitting on that stuff, right? Their customers are governments and big companies that are training AI, right? People say AI still isn't profitable right now. Why? Because they don't have enough high quality data in order to do something with it. And Spire Global has that. So that's kind of my cases as to why Spire Global and I think Sofi Technologies are, especially like in a recession, that even in a recession, Spire Global and Sofi Technologies will do perfectly fine, right? One has been basically planning for a recession for the past like 4 years, and so it's like they're like, there's gonna, just in case, right? And then this one is just like their customers don't care if there's a recession, right? And their customers have infinite amount of money. So it's like, if they don't have enough money, they'll just print it, right? Because their customers are governments. Come on, hello. But yeah. So those are my thoughts. Also, I wanted to point out one thing during the call when Powell was like, we want to be data dependent, not data point dependent. I just wanted to just rant about how that's completely not right, right? Because if you are going to say that, you just can't say that. I'm sorry, you just can't say that you want to be data dependent versus data point dependent. Why? Okay, so let's say you have a line. Let's say you have 3 dots. Where is this? Let's say you have 3 dots. 1, 2, 3. And you say, okay, 3 data points don't make a trend. 4 data points make a trend. Are you not completely dependent on whatever happens here? Right? This point, you are now data point dependent on this specific point. Right? If you need to look for a trend line, right? That's not something you can depend on. But then the moment you have another dot, you're like, oh, that creates a trend. Oh, I see a line now. You're now dependent on this line, right? So in the same case, Jerome Powell says we don't want to be data dependent. We don't want to be data point dependent. We're data dependent. Well, I mean, basically what he's saying is, I don't know what he's saying, because right now he's saying, okay, we might cut in September based on the data in September and in August. Aren't you now data point dependent on the data in September/August? Like, question mark? Hello. Anyone looking at this probably looks like I'm some crazy guy, but like, I don't know, I'm just ranting about some of the things he says. In my opinion, I think the Fed doesn't want to cut, because the moment you cut, like, we're still at relatively low like interest rates compared to like history. We're like, it's relatively low, and like, as long as the economy isn't breaking, as long as it isn't dead, right? Like, it makes the most sense to just stay as is and just hope for like sustainable moderate growth rather than seeing like boom and bust cycles, right? Like, you don't, like, for example, even in like when you're even in like weightlifting, right? You don't want to like bulk and then cut and then bulk and then cut and then bulk and then cut and then bulk, and like, this is a much more sustainable path line, right? You don't want it to be volatile, because that just causes pain in both directions. You want it to be as sustained, like as moderate and sustained as possible. I think that's what the Fed wants, right? But like, their excuses are kind of funny now. It's just like they're just trying to like grasp at straws to say why they don't want to cut. And this is honestly my opinion. Like, I think that this is what the Fed wants. But I don't know. I don't know. I'm not an expert or anything. I just say what I say. I could be completely wrong, and they could cut tomorrow. I don't know. But yeah, those are my thoughts. Spire Global, Sofi Technologies, like, they're perfectly fine without a recession, and I think they'll like their kind of their moat shines in a recession, and they'll definitely be differentiated from the rest of the Russell, from the rest of the growth technologies, from the rest of the growth stocks, from small caps, right? I don't think SoFi counts as small cap, but from the rest of like the smaller companies, I think that it's just a matter of time before people realize, before people weigh the companies, right? Rather than a voting machine, just weigh the company. I think that they're doing perfectly fine. Yeah, those are my thoughts on just the upcoming recession, or like SoFi Technologies, Spire Global. Yeah, have a good one. Where's my mouse? Oh, there it is.